Just look at the economic indicators that have piled up. More statistics have shown that we are back into the levels we haven't seen since the financial crisis or the dot-com boom and bust. Without a catalyst, debt can continue to pile up. Uncertainties can grow. Absurdities can commence. But eventually everything will change. You came here for the truth, so let me unveil that for you. Welcome to the Bear GPS. We are going to show you some charts today. I'm going to show you some statistics that are very, very important, and they are overlooked by the mainstream media because of the agenda that they have. They have advertisers who pay them money to make sure that people continue to buy their funds and their products and services that they are selling. But here at the Money GPS, there's a different agenda. Look at the Dow Jones. It's doing well today, and it actually backstopped the losses that were experienced. Actually, it was the most consecutive down days in 40 years. That was, I believe, 8 in a row or 9 in a row, something like this. And today the market is up. Why is the market up today? There's no really good reason, but hey, why not? Get the plunge protection team out there and instill some more confidence in the market. That's something that's been going on for a little while. You just have to program your little high frequency trading to ensure that it buys instead of sells. Now the market hadn't come down a significant degree, but it was still consecutive day after day after day drops. That was all based on all the trade tensions and everything else. And while nothing has changed on that front, the market has risen. Why? Because the plunge protection team has been activated, and you can see the high frequency traders have been trying to make a little bit of profit after all of this, considering the fact that nothing really has been done in terms of all the tariffs. We haven't seen any negative impact apparently. And so they just get in there, buy them up, make sure that everything remains stable and steady. Okay. This is an article here. It's quoting David Rosenberg, who you may know of. An interesting character, not necessarily going to say that I agree with everything he says and that I'm going to believe everything of his predictions, but he's made some interesting predictions, in fact. The January high in the S&P 500 will prove to be the peak of the bull market, and a U.S. recession may start within the next 12 months. That's according to David Rosenberg. Cycles die, and you know how they die? Because the Fed puts a bullet in its forehead. Now that is a bold statement. I thought it was interesting to talk about it in this way. I always say that the Federal Reserve creates the recessions. Here, he's putting it into some different language, and I thought that was interesting. The S&P 500 reached a record on January 26 and has since dropped about 4%. Now that market did come down, I believe it was 11% from that peak point all the way down, and it's recovered somewhat. At the bottom, he says, we are seeing a significant shift in the markets. The Fed was responsible for 1,000 rally points in this cycle, so we have to pay attention to what happens when the movie runs backwards. Now, what is he talking about? They have injected all of this QE, they have lowered interest rates down, and instead they're going to be reversing that. They're going to allow the balance sheet to run off. They are going to tighten up on their interest rates. Will that happen? I'm not sure. But if they do what they say they're going to do, absolutely this will create a recession. I don't know if it's going to happen in 12 months from now, but based on the way that they've been increasing, that's probably likely. But I wouldn't be betting on that. I wouldn't be shorting the market in anticipation of that, because they could simply do QE4. They could simply reverse interest rates. Or you can have another central bank around the world start to print money like crazy, and that makes its way into the US. The market is in a classic late cycle with wages rising at full employment, cooling commodities, and potential trade issues. He was one of the first economists to warn of the Great Recession when he was at Merrill Lynch before the financial crisis. The result will be higher inflation. And actually what we've seen from the Federal Reserve is that they are not worried about inflation anymore. They are willing to allow that to happen. And of course, you need that in a cycle like this. You want that to continue. Okay. Enough with that. Let me get into this here. I think it's important to know what's happening in the stock market, specifically when you break it down further. Don't just look at quote unquote the stock market. And sometimes I talk about that, but it's just difficult to mention all the details every single time I say it. But what you're looking at here is something I just showed you before, that the NYSE being that purple line there, and the NASDAQ 100 being the yellow line. You can see the divergence in between the two, that they have clearly, the FANG Plus stocks have clearly been pushing that higher, whereas the general market has not done as well. That's for sure. Now, if you just subtract the top 10 stocks or the top 5 stocks here, the FANG Plus stocks, take them out of the equation, the entire market looks completely different. Completely different. And that's something that is, of course, never going to be discussed because there's a lot of people pouring their money in. All the new money, in fact, all the new money, think about this, all new money has been going into the FANG Plus stocks. Where do you think is going to come out first when times start getting tough? Where people have made those profits. Systematically important banks have begun to lag the S&P 500. Showed you this as well, but just wanted to really highlight the point that there are indicators that show us that the actual market hasn't been doing well. Forget about the economy. I mean, I've shown you 1,000 indicators about that. But the actual market itself isn't that healthy. It's just a handful of stocks. A lot of people don't like to hear it, but guess what? You might hear it 1 or 2 more times. Share buybacks, looking at this again, where you can see that this has moved up to a territory we've never seen before based on estimates, and it looks like they will go in that direction here throughout 2018. What happens in 2019, I don't know, but it looks like that is the case. Okay. Most shorted stocks. This is getting crazy right now. I mean, this data only goes up into the June 20th, but you can still see that most shorted stocks here going up. This is just one simple indicator. Looking at this again, you can see the record squeeze that's taking place right now, going back to the financial crisis. Never been this high. Never been this high. The amount of most shorted stocks, you look at it compared to the S&P, going all completely off the charts right now. All right, switching gears. When we get into a point where we have a crisis scenario, what are the possible solutions? Well, we have a couple. The government can step in and bail it out. How does the government bail out an industry, a company, a city, whatever? What does it do? Well, it takes money from you, the taxpayer, and it gives it to where they see fit. Your tax money being used to fill holes that may be created by other individuals, by all of these just to say the least, it's corruption. But anyway, here New Jersey lawmakers are trying to figure out a way to get into the position where they can reduce the amount of burden on individuals in this particular, spending issues that they're talking about. Well, maybe we won't increase taxes on individuals. We're going to increase them on corporations. Look, no matter what you do, those taxes will never solve the problem. It's New Jersey, their pension problems. They've got problems within the state itself. You can see that this is just going to extend further and further. And the more they tax people, the more they tax corporations, the more people will leave, the more businesses will leave, and it's never going to come to a solution. Why isn't anybody addressing the root cause of the problem? Where has all the money gone? You have been paying your taxes. If you go to the grocery store, you're buying things, you're paying taxes. If you go to fill up your gas, you're paying taxes. If you go to buy something at the store, you're paying taxes. But you know what? All of that tax money seems to be burned. I don't know about you, but my property taxes continue to rise consistently. All the taxes I'm paying continue to rise. But it doesn't seem to ever be enough. It's never enough. All right, my friends in Pakistan, let me talk to you today. I'm going to show you 2 charts. There's a lot of people who want to know about this country here, whether they live there or maybe they're just interested in it. But I know that I've had many requests. I finally found some information, and it's not good, as usual. We're looking at this here being an intervention that has been taking place over the last few months in Pakistan right now. This government has quietly, the central bank has been intervening in the market And you could see that the reserves have been declining at the same pace as the currency has been devalued. It's never going to be a good thing to see this taking place. When you see the intervention that is going on and understand what this is going to do in the long term, you are destroying the value of your currency. They are printing money, they are engaging in currency wars, and they're doing the same thing that Argentina is doing. They're doing the same thing that Brazil is doing and everybody else. They intervene in the markets in order to try to stabilize, either push it up or force it down, depending on the situation, and it never works. Intervention into the markets never works, but they try it anyway. And here you can see the actual stock market, surprisingly, is not doing too well here at this time, even though this currency will probably be devalued significantly further. We'll see what the central bank decides to do. And that's all for this video. If you found it informative, please give me a thumbs up. If, in the event, you were not taught about financial education in school, you would be joining one of the 99.99999% of people who also didn't learn a single damn thing about financial education in school. So, if you want it, you just have to read these 2 books. That's all. In these 2 books, you get everything you need to know about the financial system to understand the basics of what's happening. You get the foundation, you get that historical information, and you know how to profit from it. You know how to make money. You know how to become more self-sufficient. And you can actually take a look through the books for yourself if you think that these will be a good fit for you. There's a link in the description. It'll bring you over to Amazon where you can flip through the books for yourself. Now, if you're more interested in the audiobook version, you can get that at themoneygps.com. If you're still here, I personally wanted to thank you for spending time with me today. I know that my videos may be a little erratic sometimes. I know that you might see some of the same information sometimes, but I know that you are here because you truly just want to know the truth. You want to know it, whatever it is, good times, bad times. You basically are just interested in what is it, give it to me. So that's what I try to bring to you, and I hope that you do appreciate that. Whenever you spend the time to watch my videos, you know, you might be grateful for me doing the video, but I'm even more grateful that somebody's watching it. So I'll end it there. I just wanted to say thank you again for your time today, and I'll see you in a few hours. Take care.